Things in reverse. Today's instructor will be Ryan Clyde of Reverse Mortgage Educators. We really miss you guys. We used to do this class at the Arcadia Association of Realtors as a lunch and learn, and we got to eat lunch with you on us, of course, and talk 3 hours about how the reverse mortgage for purchase can help you get more listings. Well, unfortunately, we can't really do that in a live stream format. So instead, we have to cover all this information in 1 hour in a live stream. So buckle up, guys. It's going to be a lot of information, but don't worry. Stay until the end. We're going to show you guys how not only you can just rewatch the webinar to get refreshed, but you can also take advantage of many of our complimentary resources like downloadable marketing materials. And of course, we even have a course refresher to help you just continuously just refresh on this information. So just a couple housekeeping items before I begin. We're going to take questions, of course. We'd love to hear from you guys. So all you have to do is, if you have a question during the live stream, go ahead and put it in the chat function right there on the bottom of your screens. And then we'll just answer all the questions so far at 10:30, and then at the end of the class at around 11 o'clock. And let's see here. The last thing, of course, is I think some of you might have received a copy of this PowerPoint. If you need a copy of this PowerPoint sent to you, please go ahead and privately send me your email address. I'll go ahead and get that PowerPoint to you as soon as possible. All right, without further ado, Ryan, you can go ahead and take it.
Yes, everybody. All right, welcome. And we're going to get through this material really quick. It'll go by fast. I do take a break for questions about 30 minutes into class. So if you put a question in the Q&A and I'm not getting to it, it's not because I don't care. I just want to try to get it all done, streamlined. So that's what we're going to do. We're going to get through the material, answer some questions, get you out of here and get you on your day. So here we go. Let's talk about reverse purchase loans and reverse mortgages in general. My name is Ryan Kleiss, and I've been doing reverse purchase loans and reverse mortgages for about 14 years now. And so I'm here today to help you as a realtor understand how this is going to benefit your business, right? This isn't necessarily about a client getting a loan. This is about how a reverse mortgage relates to your business and helps your business as a realtor. So that's what we're going to get through today. Okay. So here we go. All right. So why do you want to know about a reverse mortgage? Why are you even here today? Well, you may be here for a reason that you didn't think so. And I'll tell you why. Because what I've been learning and working with realtors and reverse mortgages for this year, for the past 14 years really, is that there's a lot of business that comes to you as a realtor as a result of a reverse. And hopefully that's why you're here today, not just to learn about the reverse, but to learn about how it can improve your business. I got 3 ways that we really identified over the last 10 years that a reverse helps your business and helps your client. Even if it doesn't mean they're going to do a reverse mortgage, knowing about it still helps you and your business. So the first thing I want you to know, when somebody's asking about a reverse, if one of your clients is asking about a reverse, you know they're going to get things in the mail. They see the commercials on TV. They know they're out there. They know people that have gotten them. They trust you. You're their realtor. When they're asking you about a reverse, it's not because they want a reverse. They are asking you because they have a house with equity, and maybe they are trying to figure out how to get their cash flow to work better. So a question about a reverse is not because they know the loan or want the loan. They want to figure out how to get cash flow and handle their real estate at the same time. You know, the second part to this is that maybe only 50%, maybe even only 40% that of the people that inquire about a reverse actually get a reverse mortgage. Those 50 or 60% that do not get the reverse mortgage, they still own a home with equity, and they are trying to figure out how to get cash from the property. So the next logical step is probably talking to you possibly about selling the home and downsizing. So this is why I want your ears to perk up. I really want your ears to perk up, because this is the first way that I want you to know when somebody asks about a reverse mortgage, it's not because they want a reverse mortgage. They're trying to figure out how to handle their house and their cash flow And that might be your business as much as a reverse. That's why I'm glad you're here today. You're going to be able to answer some questions about a reverse. You're going to be able to retain them. They're going to see you as a value added. So when it comes back around and they might need to sell the property instead of doing a loan, you're the obvious choice. Reverse mortgages are for realtors and for loan guys like me. It's just not in the direct format that you're thinking of. But we still see a lot of realtors get listings because they knew something about a reverse. Bullet point number one. We're going to get further into that coming up. All right. Second thing we want to know, there's a lot of homeowners that they know they want to sell their home already. Maybe they know I have to downsize. I can't afford this home. I need to get closer to the kids. I want to be in a different area. I want to be in a different property. But yet they have found out when they sell their house, they only get enough proceeds to get something that maybe isn't what they want. They have to try to qualify for a mortgage to buy something. In other words, they have figured out that selling their house alone and getting the cash is not going to work. So some of them, they don't list. Maybe they can't get a loan. Maybe the money they're getting is not enough to help buy that next home. So this is where you need to know reverse purchase helps bridge that gap many times between a client saying, I won't list my home, I can't sell my home because the cash I'm getting doesn't get me where I want to be. The reverse mortgage can bridge it. It can give them a loan where, as we're going to learn, they're not required to make a payment and they can actually qualify for it because we qualify when maybe they could get no other loan and turn it into a listing. So bullet point number two, this is the direct way a reverse mortgage helps you. It can help a client get a loan to buy their next home. We'll go into more detail on that. And the third way I want you to remember that a reverse mortgage can help you and your business, there's already a lot of reverse mortgages out there. There's clients getting reverse mortgages right now. If you find someone that has a reverse, if they say they've just gotten a reverse, this is your opportunity to flex what you're going to learn today and turn this into a future listing for yourself. A lot of homeowners get these loans. What happens is they either never learned or they forgot or their heirs have no idea how that house is going to get passed on, how the heirs get control of that house when the borrowers have passed away. You're going to learn how the heirs get the house with the reverse and how the heirs can sell the house. So that way, when you run into somebody who has a loan, you can just ask them a few questions, let them know you specialize in those helping those heirs get the property. And then you know what? You should be the chosen agent when that property is going to sell. So yeah, it's not a listing today, but it wouldn't be nice to know you got listings for 3, 4, 5 years to come that you've seasoned and you know is going to be a listing. Because unfortunately, people do pass away. We're all going to pass away. But our older homeowners that have reverse mortgages are probably a little closer to that. So prepare your pipeline and be the one that gets chosen to list those. These are the 3 ways we're going to learn about today that the reverse is going to help you with your business. Okay, so let's go. Let's get into these things. First of all, that first bullet point, right, where I said people are asking you about reverse mortgages and you need to know some things about them, even the refinance reverse. So that way, if their refinance doesn't go through, you still had helped them and you're still in that position to maybe help them sell the house. So you got to know about a reverse, just the basic. I want to try to give you an easy way to remember. If somebody asks you how reverse works, it's simply this. I've seen this reverse mortgage on TV. I've gotten a mailer for it. What is this thing? How does it work? Well, Mr. or Mrs. Client, if you know how a regular loan works, which is you've borrowed money to buy a home, or you've refinanced a home and you've pulled cash out, a reverse does the same thing. You can buy a home or you can refinance a home, get some cash out. The difference is that when you get your regular loan and you get a statement, you make a payment. Next month after that, you make a payment. That's how a regular loan works. We all know that. Well, the difference really comes in that when you've gotten a reverse and you get your statement, your payment is actually optional. In other words, you can say, I'm going to make a payment this month. Therefore, I don't even really have a reverse because I've paid what the statement says is due. On the other hand, if you send in less than what's owed, there's no problem. Whatever you don't send in is simply added to what you owe. And next month, when you get your statement, you see your balance has gone up by whatever you decided not to send in. So let's say you've borrowed $400,000 on a reverse, or for a regular loan for that matter. Let's say that you borrowed $400,000 to buy a house or refinance a house. And the first statement shows up and it says $2,000 is the bill for this month. If that was a regular loan, you'd make a payment. Next month, you get a statement that showed a little bit went to principal and some went to interest. On the reverse, if you borrowed 400,000, you get the statement. It would show you owed $2,000 for the month. However, if you said, I don't want to send it all 2,000 this month. I got $1,000 I need to use for something else. Okay. You only sent in 1,000. That means your balance goes up by 1,000. You now owe 401 because you sent in part of that. Now, if you would have sent in nothing at all, your balance would have gone up to 402. If you would have sent in 2,000, it would have stayed the same. So just remember that a reverse mortgage is basically like a traditional loan, except when you get the statement, you decide if you want to send a payment in or not. We'll talk about some of the other features in just a minute. Now, a client might say after that, well, geez, what if I decide I never want to send in a payment again? And what if I don't send a payment in for 30 years? I'm only 62. Can something happen? I've heard people get foreclosed on with reverses. I've heard all kinds of things. If I really don't send in a payment for 30 years, can I do that? Yes. You see, this loan doesn't have an end date. It's for the client's lifetime. As long as they live, however long that is, after they get this loan, they don't have to make a payment and they're guaranteed they get to stay in that house. Now, you can get foreclosed on in reverse. We'll learn why that is coming up, but it's not because a client missed too many payments or didn't make payments. It's not because the value of the house went down. It's not because they owed more than the house is worth. It's not those reasons. So the safety is that if you get the loan and follow the rules, you're never going to get something that says you have to make a payment because something's changed. The mortgage is too high, or interest rates have changed, or home values are dropped. That doesn't happen. That's the protection for getting this loan. And that's why a lot of clients, especially like in the times we have where we have some uncertainty, like something that's certain. So the reverse mortgage industry is up about 30% since the beginning of the year because it's given some people certainty in an otherwise uncertain climate. So you have to know that that's why people are asking about this as well. So remember I said a reverse mortgage is a lot like a regular loan? Yeah, a regular loan you can buy a house, a regular loan you could refinance. Well, the reverse mortgage is the same, except the reverse mortgage just became a purchase loan about 10 years ago. So prior to that, you can only refinance. So now we have a tool where a client can buy a home and make their mortgage payment optional. Kind of cool, right? If you're retired and you're in a home right now and you're like, man, this payment's kind of tough, or I wish I had a little extra cash every month. Well, they can buy a house and make the payment optional. So maybe they decide I'll make a payment for 6 months and for 6 months I won't. That gives me extra cash to spend. Meanwhile, since I haven't decided I'm not going to make any payments, my balance isn't going up as much as maybe I thought it would have. I mean, I've run into people who've had reverse mortgages for 20 plus years, and they said, wow, Ryan, my balance has really gone up quite a bit. I'd say, well, you haven't made a payment in 20 years. Imagine any loan, not just reverse. Imagine a car loan if you decide not to make payment, how much you'd owe. So it's just the interest because you haven't paid it and it's going up. And they say, Ryan, my balance has really gone up. I said, well, you didn't send in a payment for 20 years. I'd say, you could have sent in half a payment and your balance will be much less. And they're like, I didn't know I could do that. And I'd say, well, sure. I know it's not written on your statement anywhere. I know that our loans don't come with an educational package, but just know you actually decide what happens with your loan every single month. When you get a reverse mortgage, whether you're refinancing your house to get cash out and get rid of your current loan or buying a house, you decide every month, am I going to let my loan balance go up or am I going to make a payment and keep it the same? It's up to you. You control your cash flow. Here's a biggie. And here's something that's very important for you guys as realtors. when people go to get a regular loan, what do we see, right? Tax returns, W-2s, debt ratios, etc. We qualify totally different on a reverse. So when you all have a client that wants to buy a home, but qualifying is a consideration for them being able to get another loan, so many times a reverse purchase loan will get them qualified to buy that home. I would say maybe 60% of the people that get reverse purchase loans couldn't get any other financing. So we really literally put that many more people in a position to list and rebuy a home simply because they can qualify for our loan when they couldn't qualify for anything else. And now it makes it much better when I let them know, hey, I'm sorry you couldn't qualify for a traditional loan. I know you didn't want a reverse, but you qualified for this reverse. Now, why don't you just take this reverse and make payments? And now you really don't have the effects of the reverse mortgage. And they start to think differently. And guess what? In a year, 2 years, 5 years, if something happens to them, if they find themselves in a cash crunch, if they get sick, etc., these things happen in retirement, and they just say, you know what, I can't afford a payment anymore, they can just stop. You see, no other mortgage offers that, but this one does. Of course, what's the downside of that? Well, if you don't make a payment, whether it's this loan or any loan, then you will owe more the next month. That's it. But you just have to know that it's up to you every month. I've sat at a lot of dinner tables with realtors and their clients, with you all at the dinner table. And the clients are saying, I don't want to sell this house. And we simply say, no problem. I don't think the realtor or myself, we don't want you to sell if you don't want to. Why don't we work through your budget again and see why we're even sitting here with you today? Guess what? Usually when you go through the budget, reality comes back around again. They're like, it doesn't look like I have a choice. Yes, that's right. We're not telling you to sell the house. We don't want you to sell your house. You love your house. We get it. But sometimes we know reality dictates a different future. Reality says you don't have enough money to stay here, or the house needs work that you can't afford to get, or the house is 2 stories and getting up that house, the stairs is getting too much. It's in a neighborhood that you don't want to be in anymore. So many people end up selling their homes when they said, I don't want to. So I want you to be aware of this. We look for other clues to tell us that a house will be selling, even when they may be saying no to you. Because we need to know who to stay in contact with. We need to know who to give the right information to. So that way they become your clients, even when they say, I don't want to sell. Interesting proposition. I see it all the time. I had a client literally every week when we go see him, it was a long escrow and the realtor would be there and I would be there. And he would say, is there anything else I can do not to sell my house? I'd say, well, let's go back through your budget and about where you have money coming in from and everything else. And we come back to the same conclusion. And you know what's interesting? After even this gentleman didn't want to sell, loved his house, there for 30 some odd years. The house he moved to, if I called him up right now, he'd say, this is the best thing ever. Why? Because he didn't realize that the burden of having to figure out how to stay in this house was actually greater than how much he liked the house. Because when he got rid of that financial burden, he didn't care he was living in a different area. He didn't care he was living in a different house. He said, the relief I received was well worth it. I wish I would have known. So I just need to have you guys keep that in mind as we're working with clients. We have to help them get to a place where they don't realize it yet, but they're going to be much happier and maybe even healthier without the stress of trying to figure out how to pay for the house. Now, when a client says, I saw a commercial, how does a reverse mortgage work? Remember, your ears are perking up. Why? Because they may not get it. It may be a sale, but in the meantime, you got to give them good information. So the first thing you're going to say, of course, is, well, you know, a reverse mortgage is a lot like the loan you have now, except when the bill comes, if you don't want to send it in, they just simply add whatever you didn't send into your mortgage. It's really just like the loan you have now with an optional payment. Oh, okay, I didn't know that. Well, what if I refinance? I understand the payment is optional, but what about cash? I've heard reverse mortgages pay people. So does that mean the bank is taking the house and paying me for the house? No. When you do a regular refinance, you're approved for a certain loan amount. And if you borrow more than what you owe, you get cash out. That's a cash out refinance. Well, the reverse mortgage works the same. When you get a reverse mortgage, if you refinance and you pay off your existing loan and we've qualified you for more, well, that more you could take as a lump sum, or you could say, why don't you give me payments for the rest of my life? You figure out how much that is. I just want a payment for the rest of my life from the cash I've been approved for. So you're not giving the house to anybody. The bank's not paying you for your house. You simply have done a cash out refinance with the reverse and said, I don't want all that cash out now. Instead, you hold on to it and you just give it to me over the next 60 months, over my lifetime, or a mix of them. So you control the cash out on a refinance. And how much you are qualified for is dependent on your age and the value of your house. See, a traditional cash out loan, like a Fannie Mae refinance, someone would say, how much can I get cash out? I'd say, I don't know. I need to look at your debt ratios and see how much your house is worth and do an appraisal, right? But it's definitely dependent on your income. I won't give you more than you can afford to pay. With the reverse, we're simply determining how much you're going to get based on the value and the age of the client. Because see, if you're 100 years old and you get a reverse mortgage, we think, wow, your life expectancy is probably a couple years. Therefore, what? We can give you a lot of money compared to the value of your home, because unfortunately, you're going to be passing away sooner than a 62-year-old. A 62-year-old, we're saying, you know what? You have a long life ahead of you. If we give you too much money right now and you don't make any payments every month because you don't have to, then what? The interest may add up too quickly, and we don't want the house to be upside down. That's why we got to know the age. All right, I'm almost to questions. Okay, I'm going to hop on some questions in just a minute. Let's get through this slide right here. This is a traditional downsize. So what does this relate to? This relates to back to the bullet points number 1 and 2. Either when a client has asked about a reverse mortgage and they end up not getting one, they don't qualify, or they don't get a reverse and they got to sell. And maybe they want to rebuy their next house and they use a reverse. Or that bullet point number 2, where the client was simply saying, I do want to sell my house already, but I can't qualify for a regular loan, or a regular loan doesn't get me what I need to buy the next home. So we look at a reverse purchase loan. We're based on a 73-year-old borrower. Remember, I got to know the age of the borrower to determine loan amount. All right, let's say this client has a house and they sell it for $850. You sell it for $850 for them. You're the realtor. They net $400,000, which means what? They had a loan they had to pay off on the house. So maybe one of the reasons they're selling is the loan that they had on this house, the mortgage payment was too high. And they're like, I'm too tight on cash, so I'm selling this thing. Maybe they need to move somewhere. Whatever the reason, they sold this house and they have $400,000 cash from the sale. And now they tell you, here's what I need from you, Mr. or Mrs. Realtor. This $400,000 that you've now netted me from selling my home, this needs to get me into a home that I like. I need to be able to stay there for the rest of my life. And I also need this $400,000 to put some cash in the bank. Whew, that's a tall order, right? $400,000 to get someone a house for the rest of their lives and put cash in the bank? Probably not going to happen with a regular loan. A regular loan means they have a payment, so they could possibly not be able to afford that payment one day. So that's kind of out. Well, buying a house for $400 cash would give them no money in the bank. Buying a house for $300 cash might not be a house they want. So $400,000 is a tall order. Well, how about if we bring a reverse purchase into this scenario? So let's say that they have found something at 600 that's acceptable. And by the way, these numbers are all scalable. These numbers are just example, so you understand the process. In this case, the client said, I found some place I like for 600. I have 400 cash. Explain to me how I'm going to get this house for the rest of my life and to put the money in the bank, which is 400. No problem. Based on your age, if you use a reverse purchase loan, we will give the client will put down 259,000. We will give a loan for 341,000. So our loan for 341 plus their down payment for 259 gets them the $600,000 purchase price. What else have we done? Well, since they only put down 259 from the 400, they got 141 in the bank. So what did we just do here? We did what they wanted. We put them in a reverse purchase loan, which means what? They don't have to make a payment if they don't want to for the rest of their life. And they always have that roof over their head. So boom, we got them a house with the money they had available for the rest of their life. Accomplished their first priority. Second priority, give me some money in the bank. We did that too. We gave them a loan. We gave them 141 to keep in the bank. Now remember, the optional payment here. If a client says, you know, I really don't want the reverse because I don't like how much the balance grows over the course of the loan. I've seen people that had high balances. We tell them, well, look, you don't have to be like your neighbor. You don't have to be like the person that you heard that had a really high mortgage balance. How about if you only need a few extra $100 a month? Well, make a payment for only what you can afford and keep the rest in your pocket. Now you're contributing to your mortgage every month, but yet you're keeping your cash flow under your control. Very cool. That's what this person did. Guess what? This person might have had a 500 FICO score. I still got him a $341,000 loan. Yeah, it could be done. Now, I'm not saying it's simple. It's tedious, but we do it. By the way, this person might only had $1,700, $1,800 in Social Security income. And I gave him a $341,000 loan. That's just not going to happen with traditional financing. So what we did here is took a client who was otherwise couldn't move, right? Because they only have $1,700 a month Social Security, $1,800 in Social Security. They're like, I can't get a loan for what I want if I don't have other financing. I can't find anything what I want for 400 cash. And at the end of the day, giving this loan to them gave them the ability to list with you and buy that next home, kept cash in the bank, kept them the roof over their head, etc. So hopefully you can see how the reverse purchase now can bridge the gap. And transactions like these are the cornerstone of what we have seen and what we've been doing for you all and your clients. And they've been working out tremendously well. A couple things before I get to questions. Before we even tell a client that we want to list their home, before you take that listing, you should say, we need to get you pre-underwritten to make sure that you can actually buy the next home. Because we underwrite totally different than regular loans. There's no automated underwriting engines. We have to manually underwrite every loan. Sometimes the things that we need a client to get for us can take a week or 2 weeks. So we want to pre-underwrite a client, give them the approval. That way, when you list the property, you know that we can close that next escrow like that. Pre-underwriting is important. Our loans are tedious. We can do a loan when they might not be able to get any other loan, but that doesn't mean it's easy. So we need time, but it works out well. The client has to get reverse mortgage counseled. The reason for that is, well, the government wants to make sure that we are explaining loans correctly. They want to make sure that the clients understand what they're getting. So they have to call a reverse mortgage counseling company. It's a nonprofit. It's approved by the government. And we will give a list of them to call. They spend about 45 minutes on the phone and they get a certificate. And we need that before you can really start the purchase transaction of their next home. So we want to get it done early. No seller agent concessions. You can't offer a credit, neither can the seller, to cover like termite work, or maybe you want to leave the refrigerator there. You're giving them something of value other than just the house. They can't pay their closing costs. They can't pay, for like a seller's title policy, things like that, or their escrow fee. It's just got to be a very basic transaction. And, with that, what we basically let you guys know is this hotline here, you guys have probably already reached out to us when you have a client, so we can help you set a purchase contract up correctly. But if you have a question along the way before that, this is your realtor hotline. This is only for realtors. You guys call this, you're going to get somebody on the phone that can answer your questions. And we usually staff this 7 days a week. If nobody picks up, we get back to you fairly quickly. That way you guys can get the information that you need right away on how to make this a successful transaction. Okay, so we're going to hop into questions here. Just know that a couple things as we're moving through these questions. At the end of class, you want to hang out because we do have some cool marketing things coming up to show you. And we also have bullet point number 3 to cover still, which is how you're going to take and get a listing from a client who already has a reverse. Do we have any questions, Crystal? I've not been paying attention.
You know what? Like my Zoom actually kicked me out for just 1 minute, so I lost all the
Okay.
chat. I did
All right.
see one question that I remember was in my private messages, and I just want to kind of just put it out there. So they asked, how do you get the recording? Please, Stephanie's so nice there at Arcadia Association of Realtors. Please feel free to contact her. I'm sure they'll get the recording of this live stream to you guys. I do want to also emphasize at the end, while we also show you how you can take advantage of our marketing materials and how to get more listings, one of our best feedback or agent resource is our course refresher. It's a video series of just 6 videos that cover what we talk about in the class and more. So just stay tuned till the end, and then we'll talk about how you can get access to that. Did you see any questions, Ryan?
Yeah, I got them.
Okay.
Okay, so Margaret, I see you got a question. Can the reverse mortgage be terminated during the lifetime? It can, but it has to be something that the client has done that's outside of the rules. There's 3 basic rules. We're going to cover them in a slide coming right up, and it'll answer your questions. But it can't be terminated because of value dropping or the fact that the client hasn't made payments for 30 years. Those reasons, no. The client gets the loan for their lifetime. But we'll discover what does go wrong in reverse coming up. Let's see here. Nina, hopefully you got your audio working. Margaret, another question. How the reverse mortgage impact the annual tax return? Well, so we really don't deal with tax returns. And when people are qualifying for a loan, a lot of times we're not even looking at tax returns. Also, if maybe you're wondering if someone gets a reverse and pulls cash out of their house, does that affect the tax return? And the answer is usually no. Now, of course, these are always CPA questions, but I can just tell you that when you're pulling money out of your house, you're doing it as a loan. So it's not necessarily considered income, just like a regular cash out refinance. When you're doing your income taxes, you're usually not putting on there that the cash out from a house is income. It's not. You've taken the money and borrowed it. So I think that might answer your question. What is the cost to do reverse mortgage? So we have 2 kinds of reverse mortgages these days. We have an FHA reverse mortgage, which is a federally insured reverse mortgage. We have a non-FHA reverse mortgage, which is just a institution doing a loan without the insuring element of the government. So 2 different cost structures. Now, a lot of people would say, well, I'm going to go for the loan that's not FHA because there's no FHA costs, but everything has its what? Its pluses and minuses. The idea with an FHA reverse is just like a regular FHA loan, right? So one that a couple uses to buy a house, maybe a first-time homeowner. You have your FHA mortgage insurance, you have your upfront, and you have your annual component. On a regular FHA loan, non-reverse, if you guys are familiar with those, when a client does a FHA loan, they're paying 1.75% of the loan amount up front. That gets, of course, added to the loan. And they're paying 0.85% annually on the loan amount. So a FHA reverse is a 2% upfront of the purchase price. There's a cap, and a 0.5% annual. So the structure is a lot like a regular FHA loan. Now, after that, there isn't like any type of extra reverse mortgage costs necessarily up front. There's not like a special reverse mortgage underwriting fee or anything like that. It's your basic title and escrow fees. If you're doing a non-FHA reverse, even though you don't have the FHA mortgage insurance, so your cost structure is really a lot like a regular loan, your interest rates are usually higher on those. So then a lot of times it'll negate the benefit of not having the FHA insurance. So generally right now, the FHA reverse mortgage is still the product that's used the most. And the non-FHA product is usually used if someone is buying a house or refinancing a house and the value of the house is probably like $900,000 or greater. Then you're looking at the non-FHA product. Margaret, you're great with questions today. What about if the home does not worth the reverse mortgage loan amount? So let's say that somebody gets a reverse. whether they buy a house to the reverse, they refinance. Let's say they have a nice, long, healthy life. They live for 25 years and they haven't made a payment, right? That's a lot of payments to miss. Let's say that a recession comes along and they do end up owing more than what the house is worth. Do they have to pay that back? Are their heirs responsible for that? Well, the answer is no. See, that's the idea of the reverse. Is they're making a deal and they're saying, look, if the house ends up upside down, you don't have to reimburse the difference. The heirs aren't responsible. It's a non-recourse loan. So when the house is sold, it's just sold and the lender only gets reimbursed for whatever the home sold for, and nobody's making up the difference to them. FHA actually has to pay the difference to them if it's an FHA loan. If it's a non-FHA loan, the investor has to eat it. So there you go. All right, so let's move on. So here are a couple of things. You guys probably have seen a lot of this data already out there. So it may be no surprise to you. We have quite a few older homeowners here in America. We have 10,000 boomers approximately turning 65 every day for the next 10 years. We have their parents. Many of the boomers' parents are still alive. You probably have maybe 120 million people over the age of 56, 57 years old, and they're homeowners. So we have a lot of older homeowners. That's why reverse mortgages, we get questions on them. So just know that. Now, one of the reasons why the reverse mortgage has staying power is because unfortunately, our savings here have not kept up with what they need to be to move into retirement without some hiccups. So when we retire and our retirement savings aren't that strong, in this case, we only see about 45%, excuse me, of boomers, 45% have no retirement savings at all. And 55% that now do have a savings, only about half of them have 100,000. So we just haven't saved enough. And that's, by the way, every demographic needs to save more. This isn't just about boomers not saving enough. My generation, we're behind in savings for retirement. It's just tough to save enough to really establish the proper retirement savings. Now, understand though, the thing that we're doing well, my generation, boomers, we're making payments on our houses. We're owning homes. And so the equity in the homes is helping to buffer the lack of savings for retirement. So this is why our product is around. This is why many people do it. Again, when people are saying, I want a reverse, I want to know about a reverse, this is what they're really talking about. They're saying, I got to figure out how to use some of that equity to supplement my retirement because I'm like a lot of other individuals out there and don't have enough. So will the reverse ever go away? Doubtful, unless we get into a situation where everybody has saved so much money that they don't have to worry about equity in the home, and we're just not there. So that's why it's your job and my job to know about this, because these clients are going to need help selling a house or doing a loan. All right, let's move on to what happens with the reverse in the future. Remember bullet point number 3, where I said, when someone passes away at the reverse, the house should get to the heirs, right? But a lot of clients and their heirs have no idea how this happens. Insert yourself with knowledge so that way you become the person to help them do this. Many times it's going to be a sale. Let's look at what happens when a couple or a client has a reverse and maybe they're passed away and the heirs are wondering, what do I do? Well, if the house is above water, in other words, there's equity in it. They've had a reverse, yet they haven't used all the equity in it. Let's say the house is worth $600,000 and the balance on the reverse is $400,000. Well, there's equity there, right? Okay, heirs, this is what you can do. If you want to keep the house, you simply get a loan for $400,000 from somewhere else. You refinance with a regular loan. If you're old enough, you refinance with the reverse. If you got the cash, whatever it is, all they want you to do is pay off what's owed, the $400,000, and then we come off title, right? The house is always being handed down to the heirs. It's just that you have to pay off the loan. It's on title, right? So just pay us off. That's it. If the heirs say, We're not really interested in keeping the house, but we'd sure like the equity in it. Well, heirs, it's your house. Put the house on the market and sell it and take the equity. Now, when I say heirs, it's yours. This doesn't happen automatically, of course. We still have to follow the rules of what? Well, how does a house get handed down? The house probably should be in a trust. So the beneficiaries and the trustee would have the opportunity to do this. Because and again, this is where your expertise can come into play. Not only can you tell someone how they can get control of the house when the borrowers pass away, also make sure that the structure is there that they can do it. Because if only the borrower is on title of this house and they pass away, you know what that means. That could mean probate. Even with a will, it could mean probate. So you should be looking to see or asking them if they're on title or if they have it in a trust. Now, sometimes they may put somebody on title with them, like one of their heirs. That might work. But you should have a cautionary tale on any of this, of course, to talk to a professional, but you still be the impetus for them to get their situation straightened around so the heirs can properly inherit the house and then do what? Keep the house by paying the reverse off or sell the house and get the equity out. They can get up to a year to figure this out. You don't get it automatically. You do get a little time up front and then you request extensions. So as soon as the borrowers pass away, somebody does need to be in contact with that servicer and say, we're here. We want to do something. That way the servicer knows somebody's there. Otherwise, they will just put it in foreclosure because they don't think anybody's there to handle it. So you get a hold of them. We say, we're here, and they'll give you 6 months. And if you can't make it for 6 months, they'll give you another 3 months. And then they'll give you another 3 months, as long as they know that you're working towards a remedy to what? Get the house either paid off or sold. So 12 months. It's important. It's something else in your feather, in your cap for you to know to be able to help people with the situation. How about the house is underwater? Now, this is only in the case of a FHA reverse mortgage. The house is underwater. In other words, maybe the clients lived there a long time. We are in a recession. They've never made payments, and the house now has negative equity. It's upside down. It's underwater. Well, in this case, the heirs, you still have an option. If you do want to keep the house, you don't have to pay the $400,000 that's owed. Who would want to pay $400,000 for a house that's only worth $300,000? Hopefully nobody. Well, in the case of an FHA insured reverse, you don't have to do that because FHA insurance is there. So what they're going to do is make the investor or the lender whole. And they're basically going to say, look, whatever the house appraised at, in this case, 300, why don't you knock 5% off of that? So now you just got to get us 285. We're going to make up the difference to 400 to the investor. So refinance it, get a loan, cash, whatever it is, just get us to 285 and the house is yours. We're on the hook for the other 115,000 that the lender is owed. It's FHA. The heirs say, even though we're going to get the house at a discount, we're going to get a deal on it. We don't want to deal with this. We're over it. We're going to get the belongings out and we're done. Well, in that case, what will happen is, remember, the servicer hasn't heard from you, or you've told them we don't care. What they have to do then is go through in California, like they got to go through a California foreclosure proceedings. They got to send out an NOD. That's a notice of default. They got to send out a notice of sale. No, where they just can't take control of the house. They have to go through foreclosure proceedings, which of course gives you the time in case you to change your mind to go back and try to rectify it. But they just can't arbitrarily say, hey, nobody showed up. You don't want the house. We're going to take it. They got to foreclose on it. It's got to go to auction, etc. Well, if we know that, then we also know there's an opportunity to get in there and short sell it. So again, realtors, this is your opportunity to say, at the end of this all, if the heirs, or if you don't care about the house that your aunt and uncle or your mom or dad had, let's at least short sell it. So that way it doesn't contribute to what? A foreclosure on the street, etc. Let's short sell it. You can short sell it and then take them out for a nice dinner or whatever you would like to do. Okay. So this is what happens with the house that has a reverse mortgage on it. And this is where I want you to make sure, if you find out somebody has a reverse, insert yourself as a specialist, know how to get that house transferred to the heirs and get a listing out of it, hopefully. Because most of the time we see heirs aren't keeping these homes. They're putting it on the market. And what we see a lot is heirs in trouble because they waited a long time. They didn't call the servicer and it's in foreclosure and they have a mess on their hands. Hop in there, Call us up. We'll help you figure it out. We'll help you get that house under control. We'll help you get a listing for you. Okay. It's important. Cool. All right. Let's hop through some myths. I hear these all the time. I've heard them for 14 years. Remember, the governor bank does not own the home. Remember, just like a regular loan, it's just a lien on title, right? You just have a mortgage on the house. The government can't take the home. The bank can't take the home. The worst thing that would happen is that it goes into default and they got to issue NOD and they got to foreclose on it, but they just can't arbitrarily take the home. Now, will you lose future appreciation? Well, as an heir, if mom and dad got this house and they said, we're never going to make a payment again, and they lived a long time, well, that equity definitely could be eaten up. But whatever equity is there when they pass away, the appreciation, etc., whatever is there after the loan is paid off is yours when the home is sold. So it's important to, as an heir, make sure that you are paying attention to what's happening. And of course, hopefully making sure that house is in a trust. So that way you can retain control of it when mom and dad or aunt and uncle, whoever is your relative, passes away. Here's bullet point number 3. Oh, well, we know the heirs can inherit the house. We just went through that. But you have to do something. You got to be active. You got to be proactive. This is where you guys help out with them being proactive. The house ends up underwater. I can no longer live there. Okay, remember going back to that one of the first slides. The loan is for the borrower's lifetime. Even if it's underwater, we're not saying you have to make a payment or anything. You got the loan. You get to live there as long as you want, even if the house is underwater. So how do you mess up a reverse mortgage? Remember, I said you can get foreclosed on in reverse, but it's not because you didn't make payments or because the value it's upside down. No, no, no. People get foreclosed on with reverse mortgages for these following reasons. Number 1, you have to have it your primary residence. You can't get a reverse mortgage and move out or rent the property, etc. You got to be there. Now, you can rent out rooms in the house. You can rent out up to 2 rooms there and still live there. That's fine. It's still your primary residence. You can't rent out 10 rooms. You have to, it has to be reasonable, right? 2 rooms you can rent out. But now what if I get sick? What if I got to go to a nursing home? What if I'm in the hospital for a long time? Well, if you are gone longer than 12 months, if you're gone longer than a year and you haven't done anything, yeah, then you could get something that says you've been gone for longer than a year. We don't consider you occupying as your primary residence anymore. So refinance or sell the house. Well, how do you stop that from happening? What if you have been gone for 11 months and you're saying, I don't want this to happen? Get back to the house. Get taken care of at home. And then guess what? As soon as you established that it is your primary residence again, you've gotten the information into the servicer that shows you've been released and you're at home, you can leave again for another 12 months. So this isn't like a one time, you only get 12 months for the life of the loan. This is, you can't do more than 12 months in a row without reestablishing that it's your residence. Here's one. Foreclosure rates on reverse mortgages had been known to be high because people just wouldn't pay their property taxes. And guess what? On any loan for that matter, if you just stop arbitrarily paying your property taxes or insurance, eventually you'll get foreclosed on. So in the reverse mortgage industry, it can happen a little faster because since you're not required to make a payment, as the investor, they're saying, man, not only is interest adding on, now all these taxes are adding on. We need to get this rectified quickly. So keep your property taxes, your homeowner's insurance, and your HOA dues paid, and then you won't have to worry about that foreclosure happening. Third way is maintaining the home. What does that mean? Well, it doesn't mean it has to be the best looking house on the street. Basically, how I tell clients to keep their house is this. When you receive the reverse mortgage, we did an appraisal. The appraiser said you met the rules of the FHA standards. So you're all good. Keep it in the approximate shape as when you did the loan, and you should be okay. Keep it in the same shape as when you got the loan, and you're good because the FHA appraiser signed off on it. The underwriter signed off on it. You're okay. You let a window get broken. How do they know? They don't really know. As of now, they're not doing inspections, but maybe a neighbor Maybe a neighbor who you've had a battle with, I don't know, gets a hold of the lender, sends them an anonymous letter and says, you know, that house that you have a loan on, the windows are all broken. Well, maybe at that point in time, that would be considered a health or safety issue. If the lender finds out about it, of course, they could send you something saying you need to repair this because we can't have health or safety issues in this house. So uh, just note, all the years I've been doing these loans, I haven't had any clients call me and say that they ever got a letter this was an issue. So this is something that I don't hear much about. I do hear about letters coming because a client didn't pay a property tax or insurance, something like that, because that does happen. I haven't had any clients get in trouble because they moved out of their house, because usually when someone's getting a reverse on a house, it's because they are living in the house and they want to protect themselves and be in that house forever. So I would say that this is your primary reason for seeing a foreclosure notice come is because taxes haven't been paid. Okay. The other reason why somebody might say I hear foreclosures are high in reverse mortgage homes, it's because when the borrowers pass away, guess what? If the heirs or nobody shows up, then the lender has to issue an NOD to try to get somebody to step up. So we're not necessarily foreclosing on someone that lives there. They've passed away and nobody showed up. So it looks like it's a foreclosure on a reverse, but it's not necessarily it's on an empty house sometimes. Okay, cool. All right, moving right along. We have an app we designed for you. Why? Because since every age gets a different loan and down payment amount, well, you want to have a way to calculate that. So we use charts, and every age is a different percentage and it changes from time to time, etc. So I wouldn't want to send you a chart. I wouldn't want you to say, I got to call Ryan every time I sit down with a client. So I made an app for you. We made an app for you. You download it on your phone. Go to your app store, which is your Google Play Store for you Google Android users. It's your app store for you Apple users. Type in REV, the number 4 PUR. Download it. What do you do with it? You put your buyer's ages in there, because remember, we lend based on age. We look at the youngest borrower. So for married couples, put both of their ages in there. As long as one spouse is over 62 on an FHA reverse, we will still lend. Even if the other spouse is 50, they can get a reverse with their spouse that's over 62. We'll base it on the younger person, which means what? We're going to base the loan on that 50-year-old, which means you might get a lower loan amount. So the older you are with the reverse, the bigger loan amount you get. If you're not married, well, you don't get to go in the reverse when you're under 62. So unmarried people, you can get a reverse mortgage with anybody. I don't know, the guy you met on the plane, the girl you met out at the bar. I don't know, that's a great idea. I've actually heard of it happening, but if one of you is under 62, you have to get married if you want to get a reverse. Otherwise, get a reverse with your brother, your sister, your mom, or your dad. You both got to be over 62. 765-600. What is this? Well, this is about to change, by the way. But for now, whenever a house is worth more than this on a purchase or a refinance, that means that after the house is worth more than 765-600, it's not that we won't lend on it. We'll stop increasing our loan amount. So the loan, in my opinion, starts to get less appeasing, gets less exciting when I'm lending on a house that's 850, because my loan amount's not getting any bigger just because the house is worth more. Now this is about to go up, I think next year to 823, I believe. And that will change, which is why you want to use our calculator app, because the calculator app is going to be updated and you'll be able to calculate what the down payment needs to be, maybe on a borrower 70 and a borrower 65, and you put them in the calculator and we will do all this work for you. So you don't got to worry about memorizing this kind of stuff. By the way, if you do have a borrower that wants to buy a house, or someone has a question on a refinance and that property is probably like 900,000 or more, the calculator is not going to give you all the answers because we don't have the private reverse, the non-FHA reverse programmed in the calculator yet. So you may have to email or call us on that. All right. So we did make it through the basic class on reverse mortgages and reverse purchase. I want you to really remember those 3 bullet points on why a reverse helps your business, not necessarily my business, your business. People that need a reverse just have a house with equity and they may need you to sell, even though they're saying, I want a reverse. They just think that's the only thing that's out there to help them, and it might not. Second, remember this helps clients list their homes because it can actually help them buy a house. Maybe they couldn't afford it otherwise. Maybe they needed to put cash in the bank and the reverse purchase helps them do that. Third, whenever somebody has a reverse, perk up. That's a listing coming. Insert yourself. 3 important things there. All right. Now, I just went through a bunch of information, right? I don't really want you to have to think a lot about remembering all of that, number one. And number two, putting it into something that you could send to somebody. My objective here, our objective here at our company, is to try to make your business better without you having to think of all kinds of things. I just want you to know that reverse mortgage can help your business. This is how we're going to help you bridge that gap to turn it into a listing. Number one, Crystal in a minute is going to tell you how to get access to marketing materials that we already have made. You can just put your name on them and download them. We have software. We'll even mail stuff out for you, not to your entire database. We would go out of business. It's too expensive. But for a few clients, we'll mail them the materials we've already made for you. Also, we have a really nice short video collection that covers some of the stuff I couldn't cover because this is a 3-hour class. What if you couldn't remember, Ryan? Oh, what happens when they pass away again? Hey, great, watch that 6-minute video. Hey, Ryan, how does the cash out work? And I heard there's a line of credit. Hey, watch that 7-minute video. They're there, they're quick. You can watch them before you see a client. It's top of mind and you don't have to study, just watch the video. Now, what if you said, Ryan, I know some clients and I really like those newsletters you've written. And the newsletters are written, we write them to try to answer questions for somebody that might want to sell their home. And so, of course, you want to get that to an older homeowner because it speaks to an older homeowner. But what if you're like, Ryan, I think I got a client this is great for. I can't get this to them. I can't remember this. Cool. Hop into the software that we built. It's called Go Courtum, gocourtum.com. Put their name, their information in there. We'll mail it to them. And we'll mail it to them from you and from us. So you've now mailed a newsletter for 6 months and you didn't have to do anything other than put their information in. We'll only do that for a few clients that you have that maybe are really interested. But we want to help you bridge the gap between a client that maybe can list to getting that listing without you doing too much. If you're like, Ryan, this is cool. Can you tell me about clients that might actually be right in my market, right on my street where I live, who probably are going to list, but I just don't know that yet? We help with that too. Some of the short videos we have, we show you how to use software like Title Pro 24/7 in REMINE. Spend 5 minutes, put some information in those software, grab the information out, and then you have a client with the potential of listing. We even go so far as to pull the data on our video, get in our car, drive to the houses, and see what happens. So you can just watch what we do, and you may end up getting a listing out of it because we actually get pretty close to a listing, even though we don't sell homes as a living. We still wanted to try to take it full circle for you guys. And of course, we're hoping one day to get a loan out of it to help us pay for all this. But at the heart of it, we want to see our business helping your business to get listings, etc. Because it's fun. It's really fun. So that's what our video series, that's what all this stuff is that we're going to let you hop into. Crystal is going to tell you how to hop into it right now. We're at 11 o'clock. She's going to tell you how to get logins for these things, and I'll come back and answer some questions. Crystal, take it away.
Okay, great. So how you get the course refresher, the marketing materials, and the video tutorials, you just simply log into the reverseeducators.com with our login that we give you via an email that'll be sent out to you either later today or tomorrow morning. And it's very simple. You just follow the instructions on the email. You're going to click a link, set up your password, and you're all good to go. And in all terms of Title Pro 24/7, same thing as well. You're going to receive an email from Title Pro 24/7 either later today or tomorrow morning. And then you can just click the activation link, and then you'll all be good to go.
Okay, so it's very easy to get in, watch our videos, etc. Have some fun with this thing. We want you to have fun with it. Have fun with us. We enjoy trying to see what turns up when we try some of these techniques, and we'll be here to help you guys out. You can email me, you can call me, you can text me. I do seem to respond to text pretty quickly. Emails sometimes 24 hours because we are busy trying to get these things going all the time. So we do want to be available for you. Let's see. I'm going to hop in the chat room. I'll see if we have any
Ryan, do you want
questions.
to first go to the page where you have your contact
Oh, sorry about
information?
that.
Yeah,
I didn't click through for you, Crystal. I might have
that's
been
fine.
daydreaming. So
It's
this is our
fine.
course refresher. Crystal
Mhm.
told you how to get to that. This is our marketing materials. These are the newsletters we've already written for you. Just plug your name into them. Boom.
Yes.
You wrote a newsletter. It looks good. Here's how you get a hold of us.
And then I
So,
think I only saw one question in the chat. Monica just asked, when you say leave home for 12 months, I think they're talking about they have to be their primary residence. Does it include traveling? Do you just want to emphasize that really quick?
so they send something once a year that's an occupancy certification. And if you're indicating this is your primary residence, that you're there, you're not changing your address, you're not doing anything that looks suspicious, then in general, you can come and go. Now, if you're trying to hit 12 months on the nose, I can't guarantee that at some point in time they haven't tried to contact you and you haven't responded and they're wondering where you are. But we tell our clients from what we've seen, you should be at this house 51% of the time. You should be there more than not when you're being your primary residence. I don't know that if you were gone for 12 months, they'd ever know or they would ever say anything. But in general, primary residence means that you're living there, your mail's going there, you're in, you're out, you're getting the mail, you're answering phone here or there. But if you're going to be gone for 12 months, what I would do is I would get a hold of the servicer and go, I'm about to go on a cruise for 12 months. What do I got to do here so that you guys know it's my primary residence? I would be proactive whenever you're going to be gone for a while with the servicer so that you can follow whatever instructions they want to make sure that they're not sending out an NOD because they think you're gone. Okay. Hopefully that answers your question there. One thing I know that they don't do for us, first of all, our industry doesn't really have necessarily a lot of training on some things reverse. And they certainly don't train us on how to tell people that you can go away for a long time and not worry. I think they really would rather have an industry where people are being considerate of the fact that it's your primary residence. And if you be gone for a while, to communicate with the servicer. So that's my recommendation on that. Okay. All right.
Perfect.
If we don't have any other questions, Crystal, I don't see any, do we?
No, I don't see any either. I just want to reiterate again. So log in for Title Pro and to our website so you can access downloadable marketing materials, course refresher, and our videos and tutorials will be sent to you later this afternoon or tomorrow morning. I got a lot of stuff on my plate, so hopefully I'll try to get it to you guys, of course, as soon as possible. But other than that, if you have any questions, some of you may even have my email. If you have something education related, honestly, the best way is just to contact me directly. If you have anything on questions related to the loan or reverse mortgages, feel free to talk to Ryan or to talk to Robert. And then if you just call 888-242-5959, it will just redirect you to whoever the best person is for whatever question you may have. Anything else you want to add, Ryan?
That's it.
All right, thank you guys again, and we'll talk soon, and hopefully we'll be able to help you guys get that extra listing. Bye for now.
Thanks for joining. Take care.